It is a common knowledge that the emergence of global technology companies, that's tech companies in Nigeria, have led to development and growth of Nigeria's ICT space, as well as a booming e-commerce industry. In terms of its contribution to Nigeria's economy, the ICT sector has proven to be a great enabler, as the growth has seen the global tech companies from Facebook to Google and to Uber and Netflix expand their digital service, not just to capture the current market, but also to strategically position themselves, bearing in mind Nigeria's young population and expected population boom. Despite the numerous impacts of these tech companies in the country, the federal government says it's set to utilize its legal powers to collect taxes on profits made by global technology and digital firms in the country. This new development comes almost a year after the country's finance minister, Mrs. Zainab Ahmed, mandated foreign companies to pay an income tax in an amendment to the Finance Act bill. Going by the huge number of users that the big techs get from the country due to its huge population, which definitely translates to millions of dollars in revenue. The big question is taxing taxing big tech companies justified? Well, I won't be doing this alone as usual. I introduced her earlier. She's a partner at International Tax and Regulatory Services, Deloitte Nigeria, Mrs. Aishata Agboluaje. Good afternoon, Mrs. Agboluaje. Thank you for your time.
Thank you very much. Good afternoon.
Yes.
Thank you for having me.
All right, Dad. Yeah, I would like us to start with the tax policy framework that allows the federal government maybe the ability to tax big tech firms and profits. Tell us more about this, your thoughts on this generally.
Okay, thank you very much. So I'd like to start by saying maybe I would like a rephrase. Okay. Say not just focusing on big tech companies, but targeting digital operations generally.
Great.
So this is not new phenomenon globally. It's been known. It's been on for quite a while. I think it came to a head when France had an issue with eBay, and there have been discussions around it. And it just sort of reinforces my own personal belief about taxes. A tax follows the money. So federal government has said that okay, there's money here, and as I said, tax follows the money, and it goes in that direction. Also, with the taxation of digital economy, it shows that law, and which is one of the things that we do in maybe like 100 level, 200 level in law, that law is dynamic. It moves with the situation of it should be moving with the situation of things globally. So we've seen that people are moving from brick and mortar setting up. There's actually business being done across jurisdiction without setting up offices, and then there's money to be made here. So they are changing the laws to reflect that. And again, on the underlying policy, and I think perhaps this is the most important, to say taxation of companies in this regard promotes fairness. So this is an underpinning aspect of tax in any jurisdiction. So fairness and equity is what, and equality is what one of the underpinning aspects of tax. So if you say a foreign entity doing business in Nigeria and enhancing or getting benefits from people that the Nigerian economy, it should pay its fair form of tax. And this would enhance the sense of fairness in Nigerians that have businesses in Nigeria, and at the same time encourage voluntary compliance amongst these people. So this is what we need globally. So it's I wouldn't say it's targeted as tech companies. It's just that maybe because they make the biggest money, they will be the most hit if they were to pay.
Indeed, but I want to follow up with that. That was a very good way to start. Thank you very much for explaining that and taking us through that. With emerging sectors of the global economy redefining new prospects amidst technology advancement, I'm now looking at how this moves maybe affects the international business community and maybe potential investors.
Okay, so in that result, I ended with saying there's fairness. So again, going back to underlying basis of taxation. Taxation would either be where, as an entity or as a person, where you live, where you reside, because you enjoy the benefits of the community. Tax, as they say, is the price we pay for civilization. So if you are in a particular community, you pay that price for civilization. The other aspect of this is if you are making revenue from people that reside in a community that are supposed to be paying that aspect for civilization. So for investors thinking to come into Nigeria, it's one of the major considerations that they would look at. To say, okay, one of the key considerations that any entity that wants to do business in another jurisdiction looks at it, what is the tax terrain? And as I said, this is not just a Nigerian phenomenon, it's global. And it's an arrangement where if you are making money in Nigeria, there should be a basis to pay the relevant or fair share of taxes. So I don't think it would hinder investment. Rather, it wouldn't hinder investment. It just makes people want to know. And one major criteria that people look into, investors are not, I would say a lot of investors are not setting out not to pay taxes. They want to know the right amount of taxes they need to pay. They want that certainty rather than risks coming up of something coming up behind the scene. But if it's clear, if it's straightforward, they wouldn't mind. There could be instances of double taxation, which again, there's considerations around nations and around discussions globally to have a way to minimize that.
Now, talk to us about the impact of the laws on double tax treaties. Looking at some that signed, that Nigeria signed with other countries. Talk to us about that.
So thank you. And before I go to double tax treaties, I would say the way Nigeria has gone ahead with its own digital tax, and I'm saying digital tax in quote, because that's like the general phenomenon. But in Nigeria, we have something akin to that, what we call a significant economic presence. So in Nigeria, we do not have a separate tax for tech companies. It's just that we have our framework, and then we've just expanded the net, or we've expanded the base. So for income tax, we have a basis for determining how the income from a foreign company or a Nigerian company will be deemed to have been derived from Nigeria. So this is what covers digital activities, online sales, amongst other things. So when this happens, this is the general rule that applies to all foreign companies. However, Nigeria has signed double tax treaties, as you mentioned, with other countries, about over 13 countries. And the whole essence of double tax treaty is to minimize double tax. You would recall that I mentioned earlier that one of the offsets of digital tax, each country seeking to impose tax on digital income, is double tax. So to obviate the incidences of double taxation, Nigeria signs this agreement. And what that agreement just seeks to do is to allocate taxing rights. So in certain instances, it would say, oh, you country A will be the one to tax. In certain instances, it will be country B that will be available to tax the relevant income. But with regards to SCP, these rules, which is a significant economic presence, these rules, significant economic presence rules, do not apply where a DTT is in place. Rather, you will fall back on the double tax treaties that have been signed and domesticated in Nigeria. So in those cases, it will be basis of what is liable to tax as we have it in those treaties. Those are the things that will be liable. So typically, DTTs as we know it, double tax treaties as we know them, are just focused on brick and mortar processes. But that again is going out of fashion, because there's been multilateral arrangements where digital activities may come into forefront and be taxed globally in relevant countries, and there will be some give and take on taxing rights.
But are there practical challenges to implementing, of course, these ideas?
So yes. So as I said, it's it's a tool to encourage fairness and ensure that people that are making money from Nigeria are still contributing to the development of Nigeria, where the Nigerians make money to spend on them. But it's not without challenges. So the rules as we have them have largely covered B2B, which is business to business transactions. There is still a huge gap with regards to business to consumer transactions. So let's say an individual engaged a foreign entity, or had paying for things online. If the entity is not coming up with the relevant information, I, as an individual, I do not have the power to withhold tax. I do not have the power to withhold VAT or remit VAT because I'm not registered with the relevant entity that collects the VAT. So it creates one issue. So there's the business to consumer aspect that needs to be dealt with. There is some rules that the Finance Act 2020 puts in place that the Federal Inland Revenue Service may, by resolution or by regulation, appoint some people, maybe foreigners that are registered for taxes and all of that, to withhold VAT or collect VAT on behalf of Nigerian government and pay it over. But that has not been activated. So that is one challenge. The other challenge is actually ascertaining the amount of income that is generated. So these companies have to be upfront. And as I said earlier, a lot of companies do not set out to say, oh, I want to cheat the system. It's a question of what the law says. Am I paying the right amount of taxes? They don't want to pay more than they should pay, and they don't want to pay less. So there is a law. They would typically come up with the relevant accounts, but there is no the basis of verification is quite steep. In this case, the tax authorities will typically fall back on what we call the deemed income approach, where whatever it is that has come in as income will be taxed at a particular. There will be an assumption of expenses, and then the remainder will be deemed to be profit and taxed. There is also the withholding tax. So federal government has said, oh, there should be withholding tax when you're dealing with these entities. But the B2C restriction is also an implication, and the model of operation, because a lot of them are subscription based. If my subscription is $10, if you do not pay $10, you don't get the access. And withholding tax is meant to be a deduction of that from that $10. So if the way the system is set up is that you are paying the full amount upfront, and the rules that government has put in place, which is the withholding tax, may not be applicable. But be that as it may, it's a good start. We'll work on it as we progress, but there's room to address these challenges.
Well, it seems you already answered my next question, because I wanted to ask you how government will particularly be able to select or identify companies or that are tech companies that fall into this category. I was really worried about that, and I also want to follow up on the fact that at this time where government is trying to raise revenue, many will think that is why government is running all around to get more taxes. How can we expand this tax net? We talk about this almost every time.
Hello?
Yeah, did you get that?
Yes, so I got that. So one is how will the country ascertain these people? So
yes,
the world is a global village now. So it's the available. So if you know that there's a Facebook that is available here, and there's a model to earn income from Nigeria, we reach out to them. But ascertaining the actual amount of income, I suppose there will be some back end discussions with the technology team of the tax authorities to do that. I know there's been a lot of investment in the tax authorities' attempt to ascertain all of this, but it would have to do largely with those entities coming forward. We know that they are supposed to file for any foreign companies, is supposed to register for taxes and file its global income, as well as some certification of Nigerian operation, certification of its Nigerian operations. So these are some of the tools that are in place based on the law and regulations that they can use to ascertain the type of income. So it's just to know that, okay, this entity is here, and then they go all out. And one other method that we have seen them use is to look at the back end. If I'm a Nigerian entity, I'm a Nigerian company, and I'm paying, so they look at my expense head, my payment to any foreign tech entity triggers the operation. Okay, there's an expense going out of Nigeria, then there's an income leg, then I should track that. So that is that. The second question was how, you alluded to the fact that the basis of sticking to taxes tech dance is to generate money. I agree completely. So as I mentioned earlier, tax follows the money. I would say tax collection, tax authorities globally are the ones that, okay, there's money here. Oh, where's my own share? So that's the way it is. And the whole share is not, ideally, it's not to collect it. It's just to collect it and to better the lot of the populace. So how to expand the tax net? Well, it's one of the models of expanding the tax net is what we have, what has been done by getting the tech giants or people or entities that actually generate funds from Nigeria to be in Nigeria. So there is the tax nets will be expanded. There are a lot of low-hanging fruits too within Nigeria that we are not really harnessing. So you see the informal sector. The informal sector contributes. There's a data from the World Bank that it contributes about 70% to Nigeria's GDP. If you see that this is so if it contributes 70% to Nigeria's GDP, and you look at the tax that attributes to our sector, it's very low. Nigeria's tax to GDP ratio at the point, at least at the last check that I knew, was lower than 7%. So this is another low-hanging fruit. There should be tools in place to get the informal sector to play their part. A lot of this is driven by by nonchalance and apathy of people, or not willingness of people to pay taxes, and it's general rule. It's two categories of people that don't want to pay taxes: a man and a woman. So nobody wants to part with their hard-earned money. But if they see the benefits, if they see that, oh, when I do this one, this is the result, it makes it easier, and voluntary compliance makes it make people want expands the tax net and makes the system work smoother and better.
So the issue of trust comes in here, just like I was talking to Mr. Adigo, and I told him about the issue of trust with subsidy, because these funds Nigerians are looking at, where would they be channeled to? So we also need government to also make us believe in them, that when they get our taxes, they will do what is right. I think I must just let us leave it there. I just believe that we'll leave this. I think it used to be around 6% tax to GDP or 7%. Can we do better than that as we move on a lighter note?
Well, yes, we definitely can. So we have and increasing tax rates will not be the answer.
Okay.
We have the rules. It's just to ensure framework for better enforcement. So as I mentioned earlier, we have the rules taxing digital economy. So long as, and there is a lot of money, I'm sure you've heard about the saying about the bottom billions. There's a lot of money being made from individuals as opposed to companies. So all of those are not being, because there's no framework to pay VAT on or collect VAT on that. And again, there is no framework to withhold tax or get an advanced payment of income tax for the government on that. So if there could be framework to address those, that would be easier. If there's framework to make sure that people that earn income, individuals, pay right amount of taxes, publish names of people that are non-compliant, it makes it easier. We have a lot of people having private jets. This has happened. I bought this. I know that when you are going to register your property, they try to look at the back taxes, but that shouldn't be the case. It should be a process that, okay, as I mentioned, we go back to trust. People voluntarily comply, because the number of people we have in Nigeria, if government were to deploy resources to follow each and every one, it would not be, it would be a waste of time and resources, and they wouldn't even be able to capture it. So one is to ensure that people come out voluntarily to comply, and then make it easy for people to comply. Make it inexpensive for authorities to chase people, and that would, in a lot of instances, solve our issues and increase the tax to GDP ratio.
Interesting conversation with you there, Ashiata Agboluaje. Thank you very much, partner International Tax and Regulatory, Deloitte Nigeria. We appreciate your time. Thanks for joining us on Business Nigeria. We hope to have you join us anytime soon.
Thank you very much for having me. It's been a pleasure.
All right, then enjoy the rest of your day.